Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, how you doing? I am Dave Bartosiak for your top stock pick of the week. Brian Bowler will be joining me in the next segment. But first, let's take a look at my idea. You may have heard of this stock before. Zacks ranked number one strong buy. Netflix, ticker NFLX. Take a look at Zacks.com and see why I like it. First and foremost, Zacks ranked number one strong buy. Is currently enjoying an F for value, a B for growth, and A for momentum to help it round out with a BGM composite score of C. Now here's the funny part, right? We've shoehorned this into the broadcast radio and television industry, which is in the bottom 18% of our Zacks industry rank. I'm not sure that's exactly the sort of peers that it has. I don't know if I would put Netflix in the same vein as, CBS and NBC. But if you think about it, though, nowadays they're all kind of streamers, so maybe that's right. Now, here's something I want to point out. We're going to scroll down on the growth side. So we have 14.27% revenue growth for the current year, 11.53% for next year. Translated over to EPS, 40% EPS growth this year, 22% next year. Those are big growth numbers. And I want to scroll back up here so you can take a look at the PE. So we're trading at 33.85 times next year's earnings. S&P 500 is a little better than 20 times earnings. So now it's starting to make sense, right? You got these huge growth numbers, and you're paying up a little bit for it. But if we were comparing to some of the other giants in tech, these numbers are very reasonable in terms of these valuations, okay? And there has been a huge jump in earnings estimates for current year and next year. That's because of the most recent report where they actually missed on EPS, but they had an additional 13 million subscribers, which they weren't expecting, and that's the cause for the big jump. So you can see our Zacks consensus estimate is up from 1586 90 days ago to 1685 currently. Fast forward to next year, 1892 up to 2063. So things are moving in the right direction. I want to show you what that looks like on our price consensus EPS surprise chart. You can tell so much from this. Here's what I want to point out, though. Let's put a clear delineation in the pre-2023 and the post-2023. So look at what happens here. You got a big earnings beat towards the end of 2021, and then these estimates start to move to the downside. And what happens inevitably, those estimates move down, stock moves down. And I mean crater under $200 into the middle of 2021 while they're still delivering these earnings beats. Then things start to change. Estimates start to tick up. There's year-over-year growth numbers that are baked into this, and everything's looking pretty good. So that miss there isn't really the kind of miss that bothers people because they know these estimates are still pushing in the right direction because those subscribers are going up. So if you're looking for one of these tech stocks that hasn't quite gotten back to those all-time highs, Netflix should certainly be on your list. And if you remember, back in the days of FANG, this was one of the ones that was really rocking and rolling. So could the streaming giant come back into the foray as one of those really awesome top stocks that you absolutely need to own? Has Netflix won the streaming wars? So far, it's looking pretty good for them. So that's why I have them as my top stock pick of the week. Mr. Bolin, what do you have for us?
Thanks, Dave. That's a great stock pick for the week. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I have another pick for you. This one also reported last week, but I think that there's a lot of good things going on here. And let's just go right to the screen, shall we? I think that my pick is Tesla, TSLA. Tesla, TSLA is the ticker. It's a Zacks ranked number 3 right now because estimates are moving lower after a recent miss. We see that just the other day. And the earnings ESP is down lower, so that means estimates are probably going to keep dropping just a little bit. Let's go ahead and go through the numbers, and then I'll go through why I believe this is going to be a good stock for this week. It's already had a good update today. So we got a beat, and then 2 straight misses. tight little small misses in here, but, 2 misses. And we're going to go into that in just a minute as to why that's important. Let's take a look at the estimates. We see 78 cents, but that was 85 cents, so it's heading down. 94 cents from 101, that's headed the wrong way. 371 for this year, and that's down from 387. 505 is down from 523, but up from 498. I wouldn't be a bit surprised if we settle back in and around that number, as analysts, as the estimates trickle in. Just take a look at our growth rates for this year, and I think this was kind of a major cause of concern. There wasn't going to be a lot of volume growth. And it still had 18% top-line growth this year, and then an acceleration next year to 25%. So we're looking at $142 billion in sales. Obviously, I think a lot of that's going to be the Cybertruck deliveries ramping up. So let's go through finally our valuation numbers. 49 times forward earnings. That is a healthy clip there. Nifty 50, we've seen it, we've done it before, but on a good growing, large base, liquid stock, you can expect something like that. 3.5% growth in the most recent quarter. Not what we want to see on the top line. That puts our price to book at 9 times, our price to sales at 6. So we have operating margins going the wrong way, right? And we see that, but at the same time, I see net margin moving the right way. So they're trying to get something figured out here at Tesla. There was obviously the salaries increased over there. There was also some price declines throughout the quarter. So there's a little bit of financial engineering going on here. But I want to bring your attention to this slide right here. Now, this is Tesla. And let's see, we've got the last 2 misses right here. Last time the stock missed 2 times in a row was way back here. And what happened since then? I mean, obviously, there was the pandemic, but people were still buying cars, and we went straight up. And then we had the tech kind of recession of 2022. 23 was a good year for them, starting off a little softer after this report, but earnings estimates there's still growth in earnings estimates, so there's a good chance that things move higher. So we also have another idea at play here is Elon Musk's attempt for control of the company, at least in voting shares. He wants to have at least 25% voting share of this company. I think right now he's got 22 million shares, or much more than 22 million shares. He's got 22% voting control. I wouldn't be a bit surprised to see the company give him some voting shares to allow him to have 25 to even 30%, something that will keep him there, because if he's not there, the stock will drop. So I think that gets resolved in the near term. Obviously, I think there's a bounce going on here in the stock, as we can see that it was up, I think, like 7 points today. Yeah, so 4.2% back up to 191. Wouldn't be a bit surprised if this thing tests the $200 level here in the next few days. All right, that's it for this week. Be sure to join us next week when we have 2 more top stock picks. And until then, why don't you go to Zacks.com/promo for all of our latest promotions.